Sygnia Asset Management focus, sorry, I was just attending to some business there, but I am here, Anthea, just don't worry, it's all under control.
Go for it.
All right, so Sygnia focuses on retirement annuities, living annuities and endowment policies. Market cap here, 1.5 billion rand, price to earnings ratio 18.9, dividend yield 4.7, one of the recent listings on the JSE.
Yeah, fabulous, and mostly associated with their swashbuckling CEO Magda Versitska, who does a great job, I think, of putting herself out and putting the company out as a real growth player in our local market.
So we are giving big accolades across the board. Let's get you to jump in.
So what I think about Sygnia is that we call it an asset management business, and so of course you measure them on track record, assets under management, but actually I think they're a fintech company. I think more they're disruptive, they're innovative. Their kind of key is passive or ETFs. They've just bought the big DBX tracker for 325 million rand. Great story. As you say, Magda really does a good job of building brand. I'm not sure I love their marketing strategy. I think cost effective is a nice word, but if you're going to go cheap, you know, you're only cheapest until somebody undercuts you by 1 cent. So from that point of view,
spoken like a competitor, Anthea.
I can admit.
Yes, good disclosure there. And Sygnia's share price graph up on the screen right now, Paul.
Now, it's only been there for a while, that is, you know, on the market for a while. And you can see it had quite a hot start in a much more favourable environment.
Almost to 24 rand.
Yeah, remember though, look, at the end of the day, if you're an asset manager as they are, with the DBX tracker deal, they will have about 170 or 175 billion rands under management. That's great, but the problem is, of course, your fees are a function of how well the market's doing. And in the recent set of results, you could tell that, you know, there's been a bit of a cooling because the performance fees and just the other fees associated with the model have come off a touch in a tough market.
Let's come back to you in terms of the potential going forward. Remember now we've got to decide, is this again a situation where we could be looking at a 10-bagger down the line? Is this the future coronation?
So I think Magda's done well to want to build a multifaceted asset management, if you want to call it, fintech company from that perspective. I would say the last results, assets under management really didn't grow as they should have done, and you don't have you need assets under management to make money. I would say that going forward, it's probably a stock that is going to grow into itself as it does. Most companies where we are in our economy at the moment are consolidating. They're in survival mode. She's in growth mode.
So that's quite good, because obviously then there are opportunities when everyone else is in survival mode. There are opportunities for those that are brave enough to be growing.
Look, the background here is people will be aware that actively managed unit trusts and other funds are seen now as being too expensive and they don't outperform the index. So there's been a big global shift towards exchange-traded funds that have an index or passive element to them with low fees. So they've got that in the retail space with their skeleton funds. Buying Deutsche Bank's X-Tracker business, you understand how that works. Those DBX trackers will continue to be listed on the market. They will change their name to the Sygnia iTrix products or something like that. People can still own them, and that will add another 12 billion or thereabouts in assets under management. It's probably a fairly low margin business, and they're paying 325 million, as Anthea said, to Deutsche Bank to get that business. So hopefully it'll remain attractive and people will continue to support those products. And it slots in then, so it gives them a bigger portion of the passive market, which is perceived to be where the growth is going to be in future.
So bottom line, we hope that Sygnia derives value from what could be termed as an expensive acquisition.
Yeah, but I guess to ask you, Anthea, do you think the South African market is really an attractive one for this move towards passive investing, or do you think it's still a product-driven, sales-driven?
I think South Africa is still very much a product-driven. It's about the consumer, it's about the relationship. We haven't cottoned onto it yet. She's doing a lot of educational work though, so maybe the consumer will pick it up, or the IFA market will go for it. I don't see why they shouldn't, actually.
And considering I've got two active managers sitting on this side of the table, let me just say that there is a big argument that passive management outperforms active over the long term, but that's for another day. I just had to put that out there.
Yes, remember here in South Africa, when you say I'm going to track the index, you're talking about tracking a strange wildebeest-like animal that has like a few lumps and horns to it. It's not like buying the S&P 500.
Yes.
But as you say,
we can have another conversation, passive versus active. We won't leave it right there, we promise.
But as far as hot or not on Sygnia, you know, I'm going to tip it and say that I'm hot on it. I just think they've got the growth chops there.
not cheap at an 18 times PE, but I think long term you want to own it, so hot for me as well.
Well, there we go. Hot on Sygnia. Now,